Greetings everyone again from Colombia. Now that it's a new year, I figured I'd share with you my top 5 tax tips that I see often just with my mortgage clients and coaching students, and things that I've done in the past in my career. So we'll start with the highest tax bracket, which is the employees. I mean, you guys, statistically, employees are the lowest income earners, but they pay the highest amount of effective tax. And that's, whether you think that's right or wrong, it certainly is a fact. And the system's not designed to reward employees. It just simply isn't. So if you're an employee and that is your only source of income, you probably notice that there's never any money left in your bank, no matter what you make. That's because we are taxed at an exponentially higher rate. It's an increasing scale, right? So a simple trick or a simple tip for all the employees out there is to start a business. It doesn't need to be crazy, and if you don't have enough time, start a side hustle, because the benefit of owning even just the smallest of businesses is you can start writing off expenses. And the primary mathematical difference between being self-employed and an employee is business owners are taxed after expenses, whereas employees are taxed and then they spend. So there's a fundamental and a massive difference in just the way and the order of how business owners are taxed relative to employees. Now, if you're self-employed and you have a small business, depending on your income and if you have any retained earnings, you might want to look at getting incorporated. The obvious benefits of legal protection liability is one thing, but aside from that is that if you can maintain certain cash inside of your corp, the tax rates are substantially less for corporations. There's case-by-case scenario. Again, if you have a corporation and you spend every cent that you earn, there's really no benefit of having that company. It really starts to make sense, mathematical sense, when you have money left in your corp at the end of the year, because that effective tax rate is much less than a sole proprietor. Keep in mind, a sole proprietor is taxed at an individual tax rate. It's the same personal tax rate as an individual. Now, if you're a business owner, depending on the nature of your business, and if you have plans in the future to sell that company, you might want to start looking at setting up a family trust of some sort, because in the future, if you sell that company, you can take advantage of the capital gains exemption. And a family trust will allow you to maximize through numerous beneficiaries in your trust, where every beneficiary can take advantage of that capital gains exemption. So if you have a business and you're trying to build it to a scale where you can sell it, look at setting up a family trust. It could save you literally millions and millions of dollars in taxes. And lastly, and it's something myself that I'm working on, is look outside of Canada. If you work remotely, or if you have online businesses, or you have a company that could be established in another jurisdiction, then look for those options. In 2025, 2 of my businesses will be registered in 4 jurisdictions. This is completely legal. CRA is fully aware of it because of the tax treaties, but the tax benefits are substantial. There are many jurisdictions that have lower tax incentives, lower tax rates, and higher tax incentives than Canada's to offer. So because you're Canadian, you don't have to keep your companies in the jurisdiction of Canada Revenue Agency. It is your legal right to mitigate your taxes, and that is a Supreme Court ruling. I remember reading one time where the Supreme Court ruled that you are legally obligated to pay tax, but it is your right to pay as little as legally possible within the confines of the law. So if the law allows you to look for other jurisdiction to mitigate your tax burden, then you should do so. Anyways, those are my 5 tax tips for 2025, and we'll talk to you soon. Ciao. Gracias.